Good morning, everyone. It's Henry on the live stream. I appreciate you all for tuning in. I hope everyone can hear me and can see my screen very clearly. If you cannot hear me or cannot see my screen very clearly, please indicate so that I can have that fixed before we commence. On the live stream, I appreciate you all for tuning in. Thank you for your patience. Was working on the live stream, but it's all fixed right now. So let's go to the charts. So the first thing we're going to look at today is the US dollar index. We need to have a better understanding of what the overall market structure is showing us from the bigger time frame, and then we'll scale down to the smaller time frame. And so far on the bigger time frame, as you can see, the structure, we have a lower high and a lower low right here, and price came to the upside to the extreme premium zone, mitigated it, and then we're seeing a rejection of that key level. Thank you so much for your confirmation. Thank you. Thank you. I'm happy everything is working on your end as well. So looking at the US dollar index, we can see as well, we have this buy side liquidity resting right here. And you can see how price rallied to the upside to take out that buy side liquidity. Right here, you can see that very clearly. After a run on that liquidity, let's see what price is doing eventually. So after a run on that liquidity, we saw a rejection, price came into an inefficiency, and then we expanded to the upside, mitigated another inefficiency, displaced to the downside, failed to run sell side liquidity, and then we're seeing this upward move into an inefficiency. So let's go to the weekly time frame. Now on the weekly time frame, as you can see, we're still within this range low and this range high. So until the dollar drops lower below this range low, anything can happen within this range. Price can literally decide to reverse from here and continue higher, because we still have low resistance liquidity here, low resistance liquidity here as well. But don't forget, there's still a high resistance liquidity overall resting right here, because this high right here took liquidity from the previous high before dropping to the downside. But also take note, there was no significant break of structure below this weekly level. So that being said, the next thing we'll do, we'll go to the daily time frame to have a better understanding of what's happening on the daily time frame. And on the daily time frame, we're still working with this range low and this range high. And like I said previously, if we scale down to the 4-hour time frame, I said this previously a few weeks ago, you have to take note that this low right here will have a high resistance liquidity resting below this low. So price is going to find it difficult to just run below this low. And look what's happened so far. We came to that low the first time and price used it as a support zone, rallied to the upside, came to it the second time, rallied to the upside, came to it the third time, rallied to the upside again to even run this high resistance liquidity resting right here. So we're still within this range here where there's still a high resistance liquidity resting right here, inefficiency resting right here as well. So we're wondering whether price is going to continue higher or lower. But in my opinion, the first thing I'm looking at is the 12-month time frame, showing me a bearish structure. So which means in as much as price is showing me this momentum to the upside, anything can happen and could potentially reverse price. That could potentially happen from running this buy side liquidity or this buy side liquidity. Now, if we run this buy side liquidity and this one as well, then most likely we're going to run this overall buy side liquidity. So that is what I'm watching on the dollar to see what the dollar is going to do. Overall, we're still going to look at the foreign currencies, euro, Aussie, and also have a better understanding whether they're bullish or bearish and what to anticipate to see in the marketplace. So this is my analysis on the dollar. I'll be watching it very closely. Don't forget, we still have buy side liquidity resting right here with this inefficiency. So price could potentially want to come in there, run liquidity, and then if we want to go to the downside, that would be a perfect area to see a reversal. But if that doesn't happen and then we continue running buy side liquidities, then most likely this one will be the next run on liquidity. So that being said, we're going to look at euro US dollar and also look at Aussie as well. So for euro US dollar, As you can see on Euro US dollar, if we go from the 12-month time frame, remember our overall market structure on Euro US dollar on 12-month time frame is bullish, consistently creating higher highs and higher low, and a higher high and a higher low and a higher high. So potentially this could potentially be a higher low because it came down to an extreme discount, mitigated its inefficiency resting right there as well, and then we saw this impulsive rejection from that key level. You can see the inefficiency resting right there and how price mitigated it, took sell side liquidity, rejected of that position. Now if we scale down to the monthly time frame, you can basically see on the monthly time frame, after we mitigated that key level, we're still working with this range high and this range low. Scaling down to the weekly time frame, you can see how price was creating a higher high and a higher low and a higher high and a higher low. A higher high eventually dropped lower to break this structural low. But because the 12-month time frame is showing me that the structure is bullish, I'm not going to leave that on the table. What I'm going to do is to focus on what the 12-month time frame is showing me. If it's showing me bullishness, all my analysis is going to be for price to continue to the upside, because the 12-month time frame overrides every other time frame. If the 12-month time frame is bullish, even if the monthly, the weekly, the daily is bearish, price is going to still find a way to continue its bullishness. So that being said, you can see basically after breaking this low, we saw this impulsive move to the upside. Price came to the downside, then we saw another impulsive move to the upside again, which potentially broke a daily structure. We have this daily high, daily low, and then a breaking structure right here. So if we're going to continue to the upside, what I'll be anticipating to see would be for a potential reversal after price mitigates the discount position. If we use the Fibonacci from this low to this current high, you can see that anything below this equilibrium is our discount zone, and price nicely came into that discount, and we also have an inefficiency resting right there at the discount position. You can see that. So let me clear everything on my chart. If we clear that, you can see there's an inefficiency resting right there, and look how nicely price came into that inefficiency and is rejecting of that key level. So we saw it close right here. This was where Friday's market closed right here, and then opening on Sunday night, price just dropped into that inefficiency, which is also resting at a discount position. So now I'm not just going to randomly jump into any trade. What I'm going to do is I'm going to wait patiently to see a potential 30-minute shift in market structure. If I see a 30-minute shift in market structure, that is when I'm going to start looking for a trade setup. And so far, you can see we have a low here, we have a high, and then price drops, creating this low right here. So if for any reason I see a break above this 30-minute structure, then I'll be looking for a potential buys on euro to continue to the upside, and I'll be targeting the weekly highs. So which weekly highs am I talking about? I'm talking about this weekly high, because right here we'll have a weekly high and a weekly low. So if I do see any buy setup from here, I'm going to be targeting this weekly high, and that is going to be my low hanging fruit area where price can easily smash through. Because if you look at what we've done, this impulsive leg from this low right here, this low right here to this high, which is about 2.80%. So the next impulsive move, let's say we find support at this key level right here, 2.80% is going to be above the weekly high. So that is one of the reasons why if I'm to get into any buy setup from here, I'll be targeting this weekly high to get taken. And also another thing to also put into perspective is the fact that right here you can also see that we have an inefficiency resting right here as well. You can see that very clearly. And what is it resting above? It's resting above the weekly time frame highs, resting above this weekly high, which means this key level is going to be a draw on liquidity, a magnet to attract price to the upside. So right here will be my take profit position. Once price is in here, I'll be on the sidelines to see what the market is going to do eventually, because I wouldn't be surprised to see a retracement to the downside, something similar to this, which will give me an opportunity to look for another buy targeting the next highs. So that is what I'm watching on euro US dollar. Hopefully this plays out and we can all get into a beautiful trade on that one. So far you can see price is rejecting nicely after mitigating the daily imbalance, after mitigating that position, which is also resting in the discount position. We're seeing a nice rejection, and hopefully once we see this high break, the next thing we'll do will be for us to wait for price to retrace to the downside, and then show us a 4 minutes break of structure in the smaller time frame, and we'll use that as our entry in order to minimize our risk and also maximize the reward. This is how we're able to get into a trade, and the trade will be making us about 1:8, 1:10 or more. Hopefully this trade, if it works out, we're definitely going to be making over 1:10 on it, because it's a swing trade, and 2.8%, expecting 2.8% from a trade setup is definitely going to yield us a minimum of 1:7 to 1:10. So that is what I'm watching on Euro US dollar. If you do have any questions on that, feel free to drop it in the chat. So the next one we're going to look at is Aussie. Next one we're looking at is Aussie dollar. So let's look at Aussie dollar. Overall, Aussie dollar, like I've always said, I'm bullish on Aussie dollar. I'm looking for opportunities to buy Aussie. And right here, you can see price created a high, created a low on the 12-month time frame, broke structure. Despite the fact that we came to the downside, running below this low, you can see there wasn't any candle closure. Look how there was a candle closure above the high, signifying this is a break of structure, but there was no candle closure at the low, signifying this is a run on liquidity. So that means I am anticipating for a potential continuation to the upside on Aussie dollar. So let's look at the consequent encroachment to see if price mitigated the consequent encroachment on this candle as well. So right here, this is the consequent encroachment, and look what happened. Price came into the consequent encroachment, very beautifully mitigated it, and then we started to see rejection of that key level. So that being said, the next thing we're going to do now, we're going to look at the smaller time frames. We're going to scale down from the monthly, and on the monthly you can also see after price mitigated that consequent encroachment on the 12-month candle. Let me just pull that out again. So this is the consequent encroachment resting right here. So we'll go to monthly time frame. You can see basically after price mitigated that consequent encroachment, after mitigating it, that was when we started to see this rejection to the upside. Let's go to weekly time frame. On the weekly time frame, you can see we mitigated it. We'll have a high, we'll have a low, went to the upside, failed to break above that high, took liquidity from the high, dropped to the downside, but eventually still failed to run the sell side liquidity. So this is where I started to see a break of structure. You can see we'll have a high right here. You can see we'll have a high right here. We'll have a low, and then this is a break of structure. And after that break of structure, price came in for a retest. If we were bearish, what I would have wanted to see was after this rally, I would want to see a drop to the downside to break below this lows. But the fact that price failed to break below the low and then went to the upside to even break structure at the upside right here, you can see this high, price went to the upside to break that structure. That is giving me the telltale sign that price will potentially continue to the upside. Don't forget, we still have an inefficiency here. Two things are involved. It's either price will take this liquidity, continue higher, or it will come down to mitigate this inefficiency. There isn't a certainty that this inefficiency is going to get filled, but it's still a probability that price could potentially want to fill that inefficiency. But that being said, we go to the daily time frame. On the daily time frame, we can basically see what price is doing. We created a high right here, created a low, and we eventually broke structure above this high. Now, if we scale down to the 4-hour time frame to really see what the market is doing on 4-hour time frame, you can see that how price is consistently creating a higher high and a higher low, a higher high, a higher low, and a higher high. Now, I said previously, I really wouldn't want price to run this low, but take note, that is not a certainty. Price can still decide to want to run this sell side liquidity because of the inefficiency here and still continue higher. That is 100% possible. But in the meantime, we're not trying to play a prophet who's going to foretell what the market is going to do. All we're doing is doing analysis, understanding the structural levels, the key levels to anticipate for price to mitigate, and then what to look out for. So that being said, if we're working with this low and this high, because this is our 4-hour range low, 4-hour range high, pull out Fibonacci from the low to the high. This right here is our extreme discount, and you can see how price came into that extreme discount, took liquidity, the liquidity that was resting right here. So if for any reason we see a 15-minute shift to market structure or 30-minute shift to market structure from this key level, then we'll be looking for a buy for this to go to the upside. Once it comes to this level, we will trail stop loss to break even, because anything above this level, anything can happen. Price could reverse, come down, wipe the lows. So if it does reverse, it will be a risk-free trade. We lose no money. If it comes lower here, we still look for another entry, because we're only focusing on one direction in the market, which is going to the upside. We're not trying to counter trend, trading buy and sell on AUD US dollar. We're only focusing on one market direction. So that being said, what we now do, we start to scale down to the 30 minutes time frame to have a better understanding of what is happening in the market. And on 30 minutes time frame, you can see clear as day, we have this high right here and then this low. So far, you can see what price has been doing. Came to the upside, took liquidity, went to the downside, took liquidity again, went to the downside, and right here we went to the upside, but eventually we didn't see any candle closure above this previous weeks. Personally, before I will look for a buy on this pair, I want to see a significant break and close above this high. So far I've not seen that, even though this is a break and close above this high. But remember, we still have a previous week resting right here, so I would like to see price breaking above that week and closing above it. If I don't see that, I'm just gonna have to be on the sideline on this one. So if we scale down to 15 minutes time frame as well, on 15 minutes time frame, it's actually showing the breaks of structure on the 15 minutes time frame. If we're looking at this to be the high, the low right here, this was not a break, even though it broke above it and closed. But because this week's is there, I wouldn't really regard this as the break. But this one right here is the one I'll most likely regard to be a break. So what I'll do in this kind of situation is I'll go to 30 minutes time frame to look for the original down close candle, and right here I'll be looking at this very closely to see if price is going to come back into this key level. If price does come in here, I'll be watching to see a 3-minute shift to market structure. If I do see a 3-minute shift to market structure, I will use a very low risk on this trade. I'm not going to use my normal volume on this trade. So let's say, for example, if I'm usually using 1% per trade, trades like this, I'm not going to use 1% because it's not really showing me everything I want to see. Even though on the 15 minutes time frame, I'm seeing a break of structure, but 30 minutes time frame, I'm not really confident about the break of structure. It doesn't really look great to me. So I wouldn't really jump in with full volume for this trade. I'll just use very low risk. So in case if price for any reason continues lower to run the sell side liquidity, I honestly can't be bothered for losing 0.1 or 0.2%. So that is how I play the market, just in case if it doesn't go in my favor, I don't take significant losses. So that is what I'm watching on Aussie. I'll be watching this very closely, and if I do see anything interesting to share with the members, I'm also going to share that with you all as well. So for Euro is actually moving very nicely so far, and I'm anticipating to see a break of structure. Once I do see a break of structure on Euro, then I'll be looking for a buy setup on Euro. So that is my analysis, and we will take a brief look at gold as well. And you can see very nicely on gold, I talked about my key level on gold. I talked about how I want to see gold gravitate to the downside to run the sell side liquidity. You can see on the chart right here where I outlined this key level weeks back. I think about 2 or 3 weeks ago, I said this is the perfect area for me to look for a buy on gold. And look how price has consistently been coming closer and closer to that level. So if I do see price come into this level and I see a 5-minute shift to market structure to the upside, I'll be looking for a buy on gold to continue higher to potentially run this buy side liquidity, and most likely run this buy side liquidity as well. So, and as you can see, we have low resistance liquidity. So if I'm taking a buy on gold, I'll potentially be targeting this low resistance liquidity resting right here. I'm not going to put my take profit at the all-time high. I'll just use the low resistance liquidity, even though I still expect gold to create new all-time highs eventually. But right here would be my perfect low-hanging fruit area where I'm going to place my take profit position. So that is my analysis on gold, Euro, Aussie, and the dollar. If you do have any questions, feel free to drop it in the chat. I appreciate you all for tuning in, and I'll talk to you all in the next live stream. Have an amazing day, everyone.